Good Fed day, everybody. Brock, how are you? I'm free. Hi, Kevin. Hugo, Arena, Marco, how are you? So, good Fed day. Plunge protection team better get busy. If you recall yesterday, and even before earlier in the week, in fact, going back to I think last week, um, where I was talking about I'd like to see one more high. That was, when we had this pullback in here, and we got it and pointed out all the glaring divergences at this high. Asked Steve yesterday if it could be a wave four triangle. It was not much of a breakout, but look at this glaring divergence here. You don't see it? Okay, there you go. This glaring divergence yesterday on a turnaround Tuesday. So um, I don't know. It could sound pretty pat, but turn around. This happened on Tuesday. It did turn around. So if you put it together, it was a turnaround Tuesday. And the action got serious last night in Europe. So this was a swoon that we had. And here we are back at this 200 on the 2 hour. Been using the 2 hour a lot. Looks pretty ugly. You look at the day, pretty ugly day. 3,800 is going to be important. And then 37 and a half. These lows are going to be important. Right? And what could be behind it? Could it be a strong dollar? Dollar trying to come out of here was my contention that this was just corrective, gave some of the dollar bears hope. Still need to close, above 91 at least to really confirm it. But even Steve was saying there's a possibility for this dollar squeeze to happen. And I think it's underway. Euro never got through the line in the sand, didn't even attack it. Up here at 122, this moving average has contained it. And pound's been stronger, but it's giving up the ghost here. And we have the yen uh, on the verge of perhaps breaking out here over 104. There's the line, something like this. I'll do it from here. I don't care. Anyway, you get the idea. So we're right there on the end for a breakout, and maybe we're going to get yields popping on the Fed here. We'll see. So it looks like it's coming out of this consolidation pattern right here. Some people be waiting for 104. Canada getting a nice lift. Asked Blake yesterday if he thought it had bottomed, and this was a pretty shallow retrace here in Canada, looking pretty good. Had one down day here, and we're about to negate it and back over 128. Looks like 130 could be the next stop. Aussie also didn't break out. Mentee of mine is calling this a descending triangle. This flat bottom here. If that happens, it'll measure, I believe, 74-ish. Just a measured move on it. So here's your horizontal line. Let's do it right here. Okay, so we start breaking out, breaking down, and the moving average is there too, right around the 76.50, 76.60 level right there. That's going to measure 150, 140. So that would take it more like to 75. So we'll see what kind of effect the Fed has. All I could say is this looks pretty ugly after having this spike and rallying. And, like I was saying all week, the difference between this week and last week is last week shorter term timeframes were confirming the move. And when this swoosh happened, I didn't think that there would be a shot for a new high, but that was it yesterday. And not much, didn't stay over it, but it was enough for a stop hunt, took out this high by about 3 handles. With this going on, almost everything's weak. Gold still looks neutral to me. I drew a few speed lines in here just in case gold gets going up around 1880, and silver has a similar look. What would be a sell zone for me? And that would be above the 26 area right here. So we'll see if silver could hold and get it done. I have a great guest today, so stick around for Alejandro. And I think I've covered everything that I've, wanted to cover this morning. Any questions? Dollar strong, euro weak, S&P's weak, Canada looking good, and I know that Blake has been looking for this and trading USD mix on the long side, looking okay too. Canada a little bit stronger, closer to the recent highs, but risk off, right? Risk off means stronger USD mix, stronger USD CAD, and they're much stronger than the yen, but I don't know if I would be fading the yen. This was pretty orderly correction here. Maybe we're going to 106 or so, and here's your yields, and then I'm going to turn it over to Blake. The end's telling me that even though yields have come off, they've retraced back to psychological support, and the breakout at 1. Maybe it could go down another bip or so, but look at the momentum at the high before the correction. See that 77. It was a little bit of a divergence, but way over 70. So I think we're going to make a move in yields above this high. And that would tell me maybe we're not going. Yes, sometimes, Jay. So that's it. That's what I see, everyone. Any questions for me? Peter Goodburn, you mean? Okay. I believe Peter's allowing for a bear market rally. Maybe back to 94, 95. Okay. Well, maybe that's a scenario. I mean, the bonds do have not a bad look to them when you look at them on the weekly TLT. Almost looks like they could have one more hurrah up here. And that would happen with risk off.
Hey Dale,
Yeah.
I'm going to be here. I'm sorry. Can you hold up for about 3 minutes for me?
Oh, sure, buddy.
Thanks.
I can hold up for 3 days. I have canned food and I have water. Right? Can everyone else hold up for a little bit? You too, Sinatra? You're prepped? You're a preppy? Actually, one thing that I have noticed is with the weakness in S&Ps, oil's really not getting hammered, is it? The stores across the road. One of my mentees said that there was a missile fired off over Saudi Arabia that I guess they shot down. And anyone know about that? Hear about that ballistic missile over Saudi Arabia yesterday afternoon, I believe. Had no effect on the market. It depends. You could have a bear market in bonds and a bear market in the dollar. As of late, a strong dollar also would mean of flight to safety, which would be buying the dollar and rates dropping. So, but I have seen times when the dollar's going down and rates are going up too, till they get to a tipping point. I think that could start happening later in the year, where we have the dollar going down and rates going up. Yeah. Peter. Yeah, Peter's excellent. So, crude's trying to top a little bit in here, but actually when you look at it compared to the S&Ps, it looks like a champion. So we'll see. Could play some catch up or mustard. VIX is threatening too. Steve's been talking about the divergences in the VIX. VIX up pretty good today. Back over 29. You've got a major breakout. It's failed from 29 a couple of times. Here's my speed line in the VIX. Comes up around 46. That's my look for a 3 up there. Any other questions? Bitcoin selling off too. Even Bitcoin is a little bit susceptible to cash being raised. Here's Bitcoin. I got out of my EG longs for minus 18 yesterday. I thought it would hold 60. Looks like we're going to get most likely a new low in EG. I tried it for a turnaround Tuesday trade. It didn't work. Looks like it wants a new low now. There we go.
Sorry about that, Dale.
That's okay.
Literally impossible to get. Sometimes I have a few dogs.
Oh yeah.
And, I'm sorry.
Okay. Yeah.
Yeah,
You're lucky.
and yeah. It's
One's old and yeah.
Yeah, one's old. The other one is she's just very independent. So
Mm.
I was just outside, like trying to coax her to go back inside. But I know if I sit here and I start on the webinar and I'm in the office, then next thing you know, she'll, after she's out there, because it's kind of cold outside, she'll start barking probably 5 to 10 minutes from now, and then wake up everybody in my house. So
Yeah.
I can't leave her out
Did you
there.
get her in?
Huh?
Did you get her in?
I did. It just, it's like, it's like I have
Yeah.
to pull out treats and all sorts
Oh
of things.
yeah. It's bribery. Yeah.
Yeah. And I was trying to tell people that I just took some of my pound Aussie off. I was just telling the chat room here, but I had to, I sold it right here anyway. Because I've been long since 176, so it's like 200 some pips.
Nice. You want to share the screen though, bro?
Yeah, I'm just typing. Hold on. Really
Okay.
Quick. Okay. So anyway, here, let me get over here. Sorry guys, I'm just trying to play a little catch up. So I was long the pound, well, I'm still long the pound Aussie from, I've talked a lot about this as being, this is a multi-year trend line. I even tweeted it a couple of weeks ago, or maybe a week ago. So you guys, even if you don't follow me, just from the chat rooms, No, I've been long this since, around here, this 176 level. We're at 178 and change. I actually think we're going higher, but when you get a move up into resistance, it makes sense to take a little bit of profits along the way, because especially like, I mean, yesterday, just give you a good example. I was, short the Aussie dollar. I shorted it at, uh, my average was 17 or 15, right here. And it screamed all the way back up to 77.60. Post CPI numbers, it started to come down. I'm like, okay, this is, it's coming down because of, expectations. Everybody knew that the Australia CPI was going to be strong because of New Zealand last week. So it started to come off. And then obviously risk appetite started to wane a little bit. And when it slipped to 77.12 or 15 this morning, I took it off for a couple pip loss after holding it for, so I have sometimes, my timing's off, or I didn't, I didn't trade it as good as I wanted it to. Like a lot of there's one of the traders in our chat room, JT, he sold the Aussie, up here at channel resistance. And frankly, if you use Forex analytics, and even if you weren't in the chat room or you weren't trading with what I was uh, uh, saying, that we're right up against channel resistance, following the CPI yesterday. So you knew we were, up there. And if you queue off of it, then you made a little bit of money. So I'm not always going to be the best trader, or and I definitely screw trades up from time to time. So, but what I try to do is try to guide you guys at least in the right direction. And that's the goal. Cause we're not all going to be on the same page. We're not all going to be perfectly timing things, but if I can keep you in the correct general bias or general direction, that's the key there. So anyway, a lot of craziness happening over the last couple of days with these stocks, huh, Dale?
Yeah.
Oh my
Yeah.
gosh. I
Yeah.
mean, GameStop, AMC, Bed Bath and Beyond Meat, Dillard's. I mean, it's just insane. And one of the things, if you don't understand why, one of the reasons why equities are a little bit, you know, kind of, and you can see post market. I I was or pre market. Somebody said it was trading up at 2 3 something this morning. Let me see if I can pull up. I don't normally do this. Hold on, let me see.
Yeah, and it doesn't take much. I saw a tweet yesterday, Blake, where Elon Musk said he kind of likes Etsy. And I think that was before the opening, so I'm sure it flew. So, some of these influencers, all they have to do is give a symbol and say they like it, and the whole world piles in.
Yeah.
Pretty amazing. I was wondering if Elon was long Etsy before he tweeted, I kind of like Etsy. So,
Yeah, let's we could take a look at it. This is GameStop. I wonder, I'm the worst person for navigating Bloomberg. I really am. I'm like, I'm really so much better at using other programs, but and anybody that's used Bloomberg for an extended period of time knows what I'm talking about. It's like I am just like, it's a really difficult program to navigate. And I felt this way back in the 90s. I feel this way now, and I know I don't use it to its fullest expectations. But what I'm trying to find out is, where is I mean, I do have obviously
aftermarkets.
pre-market, but I don't know if I can plot it. But let's see what Etsy is doing. There's delay. Let's see, it's delayed. Is it delayed? Maybe it is delayed. No way. I don't know. Let's.
Arena's saying just type in the ticker symbol.
Well, yeah, I mean, but I wanted to see a chart of the post-market
Okay,
or pre-market activity is what I'm trying to look for.
yeah,
Here's Etsy right here. So, um, looks like pre-market we're 198 to 200 offer. So, I mean, it's actually down pre-market. So, um, and this is over 1 year. So, but there's a lot of these stocks that are just absolutely they've been flying. Let's take a look at AMC. I'm not sure what the symbol is, but I'll find out. AMC Entertainment Holdings. That's got to be it. So AMC, yeah, closed at $5, pre-market 16.
yeah.
So pre-market, it's right here. I mean, that is nuts. That's nuts, Dale.
Yeah.
It's absolutely crazy. I mean,
I've never seen this before. I was around in 2000. Um, and you had trends that just kept extending, but these, um, you know, dead soldiers coming back to life like this is something really I've never seen before.
yeah, I don't that is actually something that's quite new. Like for example, when how I made my initial fortune was and if you guys never listened to the there's a there's a video that was Chat with Traders, and Aaron from Chat with Traders, he did a long interview with me years ago about how I was eating ramen noodles, and I was I levered up basically an internet stock called GoToNet. It was GNET at the time, and it was a stock that I owned. I mean, I owned a lot of shares. I owned like probably I forget 10 or 12,000, 15,000 shares. I don't know. Stock was because it was so many years ago. It was 1997, 98, 99, 97, 97. Anyway, I bought the stock, and I had like, multiple thousands of tens of thousand shares, whatever. And the stock opened up like 50 points, and then it ran from like up 50 points to up 80. And then I was selling, dishing it out the whole way up. And I think I made like $750,000 that day. Um, it was a big day. And so I've been in those types of situations, obviously, but this is like, yeah, like you said, Dale, stocks from the dead. I mean,
Yeah.
you know,
And wherever there's
it
a,
was
a
crazy.
fairly sizable short position, they're rating. So,
I'm sorry.
and wherever there, are sizable short positions,
Yes,
they're
that's correct.
rating those stocks.
Well, let's talk about things that we can really control, because unless you guys are trading it, all it is like all it is more of eye candy, and wish I was there. And I'm not long any GameStop. I'm long pound Aussie, and I'm long Euro Aussie, and Euro Euro New Zealand and pound New Zealand. They're all up pretty good today. So I'm you know and those are the things that we have control over. And I was long some dollar max. I let it go at actually 2017 this morning. um Not as big of a position as I wanted, but I try to carry a long position as we dip down here towards support. But let's talk about where stocks are at, and we're going to start off with that. You can see where the S&P is probing. Once again, we're probing that 3,800 level in the S&P. That's important to know, because as we probe into the support, if we break through the 618, which is 37.94, I think the market will then, you're going to be seeing, let's say 37.94. This is going to be key, because that's the 618 retracement. If we break below that, then we are going to be down towards, my opinion is we're going to be challenging channel support. But, obviously there's levels of support below that we're going to have to see. Resistance intraday, 38. I mean, I'll write down 38.70. You can see it right here. But even from a double top perspective, I'm sorry, I should say, let me say that differently. A double top objective, we're talking a move down to 37.25 here. So think about that, guys. If we start really breaking down, okay. So let me write that down. 37, 38. And remember, after and let me say this. Oh no, I should probably do this. Okay, starting on Monday, in order to listen to the bias chart analysis, this analysis that we're going through, you're going to have to be a Forex Analytics member, at least the light version, yeah, which is only $19 a month. Plus, you get an app, and you get to listen to all the webinars. You get all the analysis that we do on Forex Analytics, and obviously, if you're a premium member, then I'll see you in the chat rooms, and you can read all the Elliott wave and harmonic analysis as well. But I'm going to go through this with you because it's very important, especially as we go into probably a higher period of volatility time. It's going to be important to know exactly where all your levels are at that you need to be focused on. So the euro dollar, notice where we held as support. I actually one of the things that I did just as I was, getting my dog to come in, and I actually picked up some euro below 121.10, and I sold it at 16 just as I started this webinar. Just a little quick scalp because I know I bought it here at 10, sold it at 16, because I knew we were at the 618 retracement. This is going to be really key support today. I'm going to write down 121 is key. And below that would be 120.50. Okay. Actually, you know what? I'm not going to be able to leave that asterisk there, I don't think. I have to remove it, but that's going to be pretty key for today. Okay. Resistance, 122, I think. It should be 122, but we'll probably mark up this spike high here at 121.75.
Be back in a couple minutes, Blake.
All right, sounds good. I'll be wrapping up this stuff here.
I'm trying to recover for having to go an extra 3 minutes. So yeah, I'm going to get some oxygen.
What's that?
I'm trying to recover from having to go an extra 3 minutes on the intro.
All right,
all right, buddy.
I got the joke. If I got it. All right, let's go over to the cable. So the cable, once again, we're challenging the ascending wedge resistance, but more importantly, it's a 78% retracement on a daily basis and weekly basis. So it's a 78% retracement of the 2018 high to the low. That's why it's so key. And if you guys haven't seen that and you're just now seeing it, we've been marking up the last, couple weeks, 137.55. It is very, very important resistance. If we break it, but just so you know, I think we're going to eventually break it because we are above the multi-year trend line here. And it's a descending wedge, so it's a bullish breakout in the cable. So I think it's eventually going higher. That doesn't mean we can't, slump to 134 before we make a move higher. And we could be in this ascending wedge and break back down first before moving higher. So, be aware of that. Support right now, 136. Let's just call it 136.50. Okay. Aussie dollar channel resistance 77.70 is key. That is key resistance that bears want to hold and bulls want to break right there. Okay. Support 76.30. We break through that and it's going to get kind of ugly for the Aussie. A breakdown of this, excuse me really quick. Did that happen? It didn't happen.
Done.
There we go. A break of 76.30 is when I start to get really aggressive. Some of these Aussie cross rate shorts. That's on a break back below here. That's it. So just letting you guys know. 76.30 or 40. It's actually 40. It's really 40. Kiwi had a key rejection as well. And yesterday, if you're using Forex Analytics, just give you an example. The daily analysis last night is, hey, yeah, I know we're up against resistance here, but this is a triangle that's forming. So if you were looking at that, you were, not suckered into buying the 618 retracement. So now if we get above 72.50, that would be bullish. And just so you guys know, if you are using Forex Analytics, the basic technical analysis tab, which is the middle tab on all of these instruments that we follow, that's written by me every night. And then I also post a lot of the intraday updates myself, Paul Franco, Amanda, Steve does sometimes. Obviously, the rest of the team is contributing to other things. I just wanted to tell you, though, that the end of day analysis is my thoughts at the end of the day for basic technical analysis. I want you to know that because if you're using Forex Analytics, you kind of know where I stand on certain instruments or on all these instruments on a daily basis, in case, I'm stepped away from the chat room or whatever. Support for the Kiwi is going to be right here at 71.50. I know we wrote that down yesterday, and we probably really need to be more aware of 71.30, but I'm going to write down 71.50 for intraday. Dollar Canadian, we're coming right into pretty key resistance here. So if you're, I think we can just do this. 127.75. More importantly is 127.80. We break that, we're probably going to flip from range to bullish until we can get back up towards resistance up here. Okay. 50% retracements holding at 126.85. Okay. You notice everything's range bound. Swissy, inverted head and shoulder pattern still developing. Actually, Andre just posted a bunch of stuff on the Swissy. Here. If this is our chat room, guys, you want to know how active our chat room is? I got up 2 hours ago. I'm still posting. Okay, so you guys can kind of get the picture. This is the last 2 hours. Somewhere around here where I got up. This is how much chatting goes on in our chat rooms, just to give you an example. The reason why I wanted to bring this up is because if you look at Dollar Swiss and Andre's count here, that he posted that in the chat room this morning. Andre's looking for, we got the inverted head and shoulder pattern. He's looking for a move back towards basically the breakdown point, which would be, up here on an intraday basis. So, let's keep that in mind. Resistance, 89.20, 5. Support is going to be 88.50 again, because I don't know if we're going to make it back down towards the support there. This is key, because if that breaks, then we flip to bullish pretty quickly. So US dollar, Norwegian krona. Look at the test right now. You guys know this is key. Look, If you guys are bearish, the US dollar Norwegian krona, you should short it here. If you are, right? I know Steve's bearish. Steve, if you're bearish, US dollar Norwegian krona, this is where you should add. Technically, I'm not saying that you should.
This is
or-
actually where I'm gonna be taking half profits if we break above here, not
Oh,
adding.
Okay, so there you go. So that's what Steve's thinking. But if you are a US dollar Norwegian krona bear and you are like dead set, like it is going a lot lower, this is where you should be shorting. This is previous support long term from September. We already rejected it once. There's channel resistance, trendline resistance just above at 870. Short it here if you're a bear. Now, as Steve just pointed out, he's like, hey, I'm going to cover half if we break above that. Look, if Steve's thinking it, probably bigger institutional guys are probably thinking it too. So I'm going to write down 865 and then 870. And I'm going to put a couple asterisks there because if that breaks, it will flip to bullish. Support 850. Remember, it is FOMC day, and if you don't think we can extend back down there, you're wrong. It's a Fed day. The dollar Mexican peso, we were looking for a retest of this trend line. Let me see. This is if you go back, right? We basically retest that trend line. I got long yesterday at 1995 and I sold it at 2003, and then I rebought overnight and below 20 and just a small position. Nothing to write home about, but that's how I'm playing it, is off of that support. And if you were in the chat rooms yesterday, you knew that 2030 is going to be resistance. Support is right now, I would say, is anywhere near 20. So that's resistance. That flips us to bullish on a break. Okay. Dollar yen ripping this morning. Again, dollar yen is one of those that I'm just really not dealing with. We are above 104. So we actually cleared this trend line that we were talking about yesterday. Remember, because yesterday I was like, okay, resistance is going to be at 104. All right. Now we broke above that trend line. So we might be able to get back up to 104.40, which is major trend line resistance.
Graga has a winning pip on that.
Nice. That's good. He's trading well coming back off of his surgery. So 103.30.
What's he doing the 40 yard dash now?
I have no idea. I've got he in his wheelchair.
4 or
I'm
5.
not sure.
Yeah.
Just kidding. Here we're right up against a 90-60 level resistance. Remember, this is a 618. Guys, if we break that, we're probably heading to 91. So just remember that from yesterday. 90-60. Remember, we're still range bound. Notice that everything's in range. Where's my gold? There we are. So we had this inverted head and shoulder pattern developing. If you guys don't remember, this is the shoulder. This is the other shoulder. The head. Triangle's breaking lower, so we're probably heading back down to 1820 today. And I'm going to write down 1800 as being really key support. That's a spike low. That shouldn't break. And if that breaks, gold bulls are going to have a tough couple weeks, in my opinion. Resistance is 1875. and we are range bound. And this is ahead of the FOMC. That's just the way it is, guys, right now. So there's the bias chart. Stelios, you can go ahead and take a screenshot of that. And good morning, Steve, Stelios. How are you guys doing today?
Good morning.
Morning, Blake.
Morning, guys. So what's up? What's happening? How crazy are these stocks? I mean, isn't this just like wild? It's wild that billionaires can throw around their weight and move the markets like that. Isn't that crazy?
In essence, they opened the door to that when at 4:35 we have guaranteed funding tweet from Elon Musk went unpunished, if you are asking me.
Oh, 420 funding secured.
That one.
Yeah, that should have been punished properly.
Yeah.
So, like Jack says, it's criminal, and I think he's right.
Yeah, but this market now is I actually like to see all the wheels one by one going off the bus, because I think that's the only way that eventually we're going to reach the point that the situation is going to be so ridiculous that they will be forced to do something about it. You know what I mean?
Peter Goodburn made Peter Bookvar, when I was talking about how there's a housing shortage here in the U.S. and you could tell he was a little agitated, and he goes, yeah, so how can the Fed justify continuing to buy MBSs? Because that's adding to it, because of low rates has made it more affordable for people to buy, and now there's no inventory. So even when it comes to, housing, they're creating this type of, ask Blake.
Yeah,
Put
of
a house
course,
up for sale.
that's a
people come
rhetorical
in.
question from Peter, because Peter is very good and he knows exactly what the problems are. The main problem is that the Fed is cornered, because the only thing that keeps this facade that there is an actual economy that's working is asset valuations and nothing else. So irrespective of the costs, they will do anything needed, and irrespective of the negative side effects and the spillover costs, they will do anything that's needed to support that. So as you understand, step by step, the cost to pay to do that becomes even bigger, and the moral hazard also becomes even bigger. Of course, at some point, that will come to an end. I have no idea what the pin that will prick the bubble is going to be, but at some point it will happen. And when it does, it's going to be very, very, very ugly. But on the other
I guess
hand,
his yields eventually.
It's a good guess.
It is a good guess that's going to be yields, but I don't think the problem is going to start by markets that the Fed fully controls. I think that the route is going to start by markets that the Fed doesn't fully control. And then the market is going to wake up to the reality that the rest of the markets seem to be orderly just because there is a single buyer.
Yeah. Peter doesn't believe that they can maintain control of the long end, only the short end.
All right, guys. Hey,
anyway.
Well, you guys have been chatting. I've been giving you guys some secret sauce trades over there. So I got to get over to my office. So I just want to say good luck, everybody, with FOMC. And don't forget that we still have the pricing special going, but it is going to be disappearing. It was supposed to be gone 2 days ago. We're leaving it up through the remainder of the week because we are changing the format of the face webinar. It'll still start at the same time. Just remember, we're going to be doing the bias chart at basically at 9 o'clock Eastern every day. So I can answer questions and go through like more detailed analysis on the majors. All right, guys. I'm out of here. Good luck, everybody. And
Bye-bye,
I hope
Blake.
you
Good
don't.
luck,
Good
man.
I
luck
hope
at
you
the-
don't hit any major traffic on your way to the office.
Hey, from what I understand, like AWS was down yesterday, all sorts of technology issues. So
Yeah.
you know, people have.
Anyway, have a nice ride to the office, buddy.
Thanks, man. All right, see you
All
guys.
right.
Thanks, Blake.
Bye-bye, Blake.
So yeah,
Hey,
crazy
Stella.
markets. I had two friends who are not traders calling me this morning saying, "Look, all these people are making so much money on cryptos and GameStop and all. What do we buy to make money?" I'm like, "Yeah, okay, don't gamble, you know." But
Yeah, that's usually the last
Yeah.
part of the bubble when Uncle Joe and Aunt Mary that don't even can't even give you a definition of what the stock market is.
yeah,
They start wondering, oh, is there something we should be doing to become rich there?
It's like my mother the other day. I was discussing with my father some of our trades, and she goes, I want a part of this, but only the winning trades." I'm like, nice one, mom. Yeah. Anyway, what do we got today?
Count me in as well, by the way, Stelio. I'm up for that as well.
I'd like to get in that fund.
So we have the Fed today, and frankly, I mean, at this point in time, I don't see what the Fed can say that's going to be different to the last months. Anything other than dovish would be a big surprise, and I don't think the market's waiting or ready for anything like that. But I don't think it's happening anyway.
Yeah.
So let's see what they give us, but I think it's going to be another snooze fest. Markets have
Probably,
been
yes.
crazy. Equity markets, we know, we've seen what's happening, and it's just the most shorted stocks like GameStop and Dillard's and that they just explode.
Are the ones that perform better.
Of course, and this happens over and over again. It's cycles. But other than that, it's been.
I don't remember who somebody wrote yesterday on Twitter. I found that amazingly funny. The sad part is that it's actually real. He said, like, just make a IPO a company that's going to own a portfolio of only the most shorted stocks and retire.
Yeah, that was
Like
the
a
way markets
SPAC.
work now.
Yeah.
It would work. Yeah.
Guys, I think that Paul's going to once again emphasize the importance of fiscal stimulus and to try and talk to Congress about going with Biden. Bookvar didn't think Biden would get the 1.9 trillion, but Powell every time it's like he is saying it's almost hat in hand, which is different than I've seen from a Fed chairman for a long time, where I can't remember them saying how much they need.
Let's
Government
start by
to
reminding
act.
the obvious that that's illegal, which of course doesn't mean anything anymore, right?
What's legal?
It's illegal. It's beyond and above and completely contrary
To the Fed's mandate?
Yes.
Oh, okay. You mean
Absolutely.
asking Congress to act is an illegal act?
First of all, interfering in the fiscal part is in any way is completely out of their mandate. A.
Okay. Yeah.
B. What's even funnier is that since there are no other buyers but them, it's really funny having the Federal Reserve, which supposedly, its mandate is price stability, etc., in essence asking the government to give them bonds to monetize. The fact that debt monetization is illegal is not, in essence, my words, is being proven by the fact that Bernanke himself 12 years ago denied that they're doing so in front of Congress, knowing that that's something they cannot do, right?
Okay.
And now we have the Fed, in essence, that says, give us more debt to monetize.
It was temporary. You can't wait for them. We can't expect them to unwind it within 12 years. It's temporary. It needs more time.
Yeah, of course, there might have been some foolish enough to believe that a 4 trillion a 4 trillion balance sheet could be unwound back to, what was it, 900 billion before the 2008
Yeah.
Fed intervention started. But I'm pretty sure that there's going to be nobody left when a 10 trillion balance sheet, because I've said it before and I'll reiterate my opinion. I believe that the Fed is going to have a balance sheet of roughly 10 trillion by the end of this year. I don't think that there's going to be anybody left believing that they can unwind 10 trillion back to 900 billion or whatever, right?
Yeah. Anyway, yeah, there's no way that's going to get unwound. I mean, realistically, no way. Okay, what else to say? We had some numbers for people who care about numbers. Australian CPI came in at 0.9% versus 0.7 expected, so it beat a little bit, but really nothing major. We had US core durable goods orders roughly in line. Again, nothing major. Two interesting things. Germany, they cut their 2021 growth forecast from 4.4% to 3%. And they now see that they should be going back to pre-COVID GDP levels in sometime in 2022, mid 2022, and that was
Yeah,
before
okay.
they were saying it was going to be earlier. I'm mine at mid 2022 and bid on, you know. But anyway,
Yeah.
goes.
We've seen this game before. You remember post-financial crisis
Yes.
with, it reminds me of the dot plot.
Yeah, the hockey stick.
Yeah.
Yes. Anyway, this is what they're saying. Boris Johnson, the UK Prime Minister, also made some comments, and basically he said that there's not enough data to say when they can lift the restrictions, and he said he hopes that school kids are going to go back to school in early March. Amanda said straight away, I highly doubt that, and I think I agree with her, unfortunately.
Same here.
The UK are also imposing 10-day quarantines on arrival from certain COVID hotspots. So, unfortunately, the situation remains, and, lockdowns coming on and off, and countries trying to escape lockdown and trying to go back to normality. I think we can all agree this is going to take some time. And the initial optimistic scenarios, unfortunately, I don't think they're going to be manifesting themselves. But eventually, with the vaccines and everything, we've said this before, we should go back to normality. But the hope is that the effects in unemployment and job losses and the companies shutting down are not permanent, or at least as little as they can be permanent. But yeah, not great news anywhere. But overall, nothing's changed in the big picture. Nothing new yet. So we wait for the FOMC tonight, and hopefully we might have something to talk about tomorrow.
Pretty sure he's going to get softball questions, Powell, because it is more than obvious that the vast majority of reporters that go there, they have to first be approved. I mean, it's either that or they're like retarded, literally retarded, because there are so many hot topics that you can open conversation with, and in some miraculous way, like nobody touches them, right?
Maybe. I don't know what to say, but you are right. They're not making
Steve,
tough questions.
Can you work on telling us how you really feel about things? Anyway, I was still thinking about my the hockey stick. I loved my hockey stick. It was a Northwood, and I always dreamed of being Bobby Hull and hitting a slap shot like him. Anyway, hockey was on my mind. But yeah, Steve, I'd love to get you in the room with Paul.
It'd
be great.
Probably he wouldn't be answering the vast majority of the questions, or it's what politicians do when they get the tough questions. They give answers that are completely unrelated.
I can kind of see him pulling his hair and then running out of the room.
Yeah, you ask a tough question and then they start answering about something like totally different, like they never heard the question. That's probably what would happen even if they let reporters actually, ask, proper questions to them. In case though somebody does ask him, because it is a question that on occasion comes up, and they give the standard answer like, what do you think about like stock market conditions? Do you think, things are holding up, etc.? Following the last few days of craziness, I'm
How
curious to
about the
see.
penny stock volume, which,
Yeah.
is a graveyard for investors
Yes.
normally,
Yes.
because
Yesterday,
yeah.
GameStop had more volume than all the funks combined. Just to give you an idea. So I'm curious to see if he's going to give like the standard answer or something else. I believe he's going to give the standard answer, because the last Fed chairwoman actually, that at some point had hinted that valuations are a little bit rich. I remind you, was Yellen, rather closer to the start of her tenure.
Oh yeah, she thought biotechs were overvalued.
Yeah,
and she
yeah,
even
yeah,
named
yeah.
a sector. Yeah.
Yeah,
Which was,
and the market didn't really like it, and I think that's going to be the last time that they're going to comment like that. As always, even like a day before a bubble bursts, they're going to act like nothing is happening, and they're not seeing anything.
it's contained.
Yeah, it's everything is contained, and it's the market is like healthy, and everything else, blah 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 blah.
All right,
Anyhow,
buddy, you have about 4 minutes to answer some technical questions.
yeah, DXY. Let me give the reversal scenarios, because I'm going to take just 10 seconds to reiterate that we seem to be having a reversal once again today, but it's not a reversal until we close the day and we can confirm, right? Because if you remember, people fell on that trap a couple of days ago, trading days ago, I mean, at the end of last week. Sorry, it was Monday. So if we assume that we do have a very negative day for stocks today, and we do break down, for example, below this S&P wedge, it's a big if, then we can start talking about finally some type of a retracement lower, which would open the door for a move towards 35.90 in the case of stocks. In the case of the DXY, that would probably translate to something like an inverted head and shoulder scenario playing out here, with the neckline being roughly at 91. You can see it here. We've already broken out of a wedge. But it's all about what type of a corrective move we had here. Somebody can see potentially an inverted head and shoulder scenario.
Yeah.
Shoulder, head, shoulder, right? 91 being the neckline. So in that case, we should see that type of a move playing out. In that type of a case, we should see Aussie breaking down from this triangle instead of breaking higher, right? We should see the Kiwi breaking down from this potential bull flag and just, not being a bull flag and being something different. We've already seen the euro, which, to be honest, is not that risk sensitive. I remind you that the euro started moving lower a lot before stocks even bothered doing anything, and they still haven't done anything. But in any case, the euro seems to be trying to break down from like a bear flag. So the euro is, in any case, looking like it's kind of heavy in the short term. In that case, we should see USD NOK finally producing like a bigger rebound higher, in which case I'm going to be taking profits 50%, as I was saying, and we'll wait to add. Clearly, we're going to see USD CAD, which is trying to break out from this descending trend line resistance. We're going to see it move higher, with the first area of resistance being at 130. We are going to be seeing instruments that are risk sensitive, like USDMXN. Look at this. USDMXN today trying to break up back within this previous channels territory. We're going to see it move to the upside. We're going to be seeing some of the crosses, Euro Aussie, Euro Kiwi, Pound Aussie, which is actually, as we speak, Pound Aussie is breaking higher from a descending trend line resistance, and Pound Kiwi. Okay, we're going to see those accelerate higher as well. to be honest, pound kiwi, if you remember, we had this conversation with Stelios as well a few days ago. I said, be careful, a retest of these broken channels. Trend line support might act as resistance. It did. So we got a nice rejection from there. But adding to this, the rejection did not lead to an impulsive move lower. It looks more like some type of a bull flag. So in case we get risk off, I think the next time we revisit this trend line resistance, if we are under a risk of conditions, I think we're just gonna slice through it. Okay. So, you should be careful, especially given the fact that in the case of pound kiwi specifically, that will be happening following a major breakdown from a multi-year formation, right? This is like a 4.5-year formation that we broke down from. So, imagine the consequences of a false breakdown from a 4.5-year old technical formation. So,
Huge.
yeah. So these are the things, I would be paying attention in case we confirm today that something is up. As I've said multiple times before, if that's the case and when we start doing that, I expect the move to be sharp, but not very long-lived. I mean, I expect it to last a few days to a couple of weeks. But within that period of time, there is a very good chance that we're going to see a very, very decent move. And here is copper, Dale, since you were asking about it yesterday. We're out of this ascending wedge. If we actually accelerate lower, somebody can even make the case here that after breaking through the wedge, what we did here is that in essence we
We're
formed,
breaking the triangle. Yeah. Oh, head and shoulders. Yeah.
right? It's not very beautiful, but
No.
right?
Yeah. The whole board looks like a sell, except the dollar. Anyway,
So-
that's what
Yeah.
happens.
So
Anyway, we're a couple minutes. Go ahead. Wrap it up.
We've been warning about things clearly losing momentum, right?
Yes.
We've also been warning people not to try to jump the gun because you can get a lot of false starts. So in my opinion, just don't start selling everything intraday to day. I mean, at least wait for the day to close and confirm that yes, this is actually going to be a very bearish day, because we started on Monday at the mid of the day. People thought that everything
The
is
world was
collapsing.
coming to an end.
The world is coming down and tumbling down, and the sky is going to fall on our heads, as Asterix was saying. But I think we should at least wait for a daily close. So that's it from me.
Thank you, Steve.
Thank you, Dale.
Alejandro, really looking forward to having a conversation with you and meeting you. I want to thank you in advance for taking time out of your day to be with us. It's your first time here in FaCe. Welcome to FaCe, Alejandro. Or could I just call you Alex, buddy? Have you been in Zoom before? I'm asking you to unmute.
Hey, can you hear me now?
Have you? Yes.
Awesome.
Nice to meet you, Alejandro.
Yeah, nice to meet you too.
Yeah.
Yes, I used Zoom before a couple of times.
Okay.
But I didn't
All
pay
right.
attention to that button.
So you're going to probably want to share your screen. It's that
Yeah.
green box.
I'll do that.
And
here.
we can get underway. And while you're doing that, Alejandro, I'm going to call you
I just realized we have. Hi, Alejandro. You were at FXCM at some point, right?
Yeah, that's right. I joined FXCM in 2009. And
yes, and
stayed with them
you are
until
from
2016.
you work in the UK, if I remember right, correct?
Yeah, that's right. So
yes, Alex is a very good
trader,
analyst and trader, actually. Yes, nice to
Yeah.
have you.
Nice to
See?
meet you so much.
I find everybody, Steve.
Yeah.
Yeah, yes,
Yeah,
I was with FXEM actually from 2009 to 2016, and I used to do various things like also on daily effects,
right.
webinars.
Yes.
And
Yeah.
I'm quite
Well,
amazed too, like
you used to
after,
have a soft, cushy life. What do you
yeah.
have to do now? Work?
No, I worked a
Anyway,
lot
I'm
before.
kidding you. I'm,
I
I'm
still
kidding
work a
you.
lot. Actually, I'll take that back. When you get more senior within, especially within like the brokerage industry, you do work slightly less, which is nice. So there's
Oh,
like an end of
I
a
was
tunnel.
just guessing. All
Well,
right, thank you for the confession. But you know what, Alex, I want to take you back even before those days
cool.
and tell, not back to, grade school or anything,
Yeah.
but what were your aspirations when you were younger and how did you end up in this?
So when I was like 18, 19, actually when I was 15 already, I was into music and things like that. I
Yeah,
was born in Sweden, by the way,
okay.
um, and over there was with music. So I wanted to get into that, and I wanted to study economics, or sorry, business and music. So I started with that actually at university my first year. But then in Sweden, everybody needs to do like there's like a conscript service. Like you need to do like
Oh,
yeah, you need
okay.
to. So you need to do
Yeah.
like military basic
Yeah,
training.
like Israel, a lot of countries have it. It's, part of your
Yeah, we have it in
responsibility.
Greece. So anyhow, the story is already interesting to me because you're not a Swedish looking guy, clearly.
No,
You
I'm
were
not.
you were born in Sweden and you managed to live a country that has these type of girls. I mean, I went there for my bachelor party and I almost never returned to get married.
I get you. I feel you. No,
His wife to be bought him the ticket to go there, and she was hoping he wouldn't come back.
no,
Okay, he
that's
won't tell. He doesn't talk about that
and,
side of
and
the
and the
story.
fun part is that Swedish girls are so used to like tall, blonde, excellent looking guys, and they like exotic. So I'm pretty sure Alejandro would have and good luck there.
no, but it's true. It's
I know,
true.
I know.
Like when I go to because my parents are from Chile, South America,
Hmm.
and when I go and visit there when I was younger, I'm married now, I have kids and everything, so obviously off the market. But when I was going back before, like I looked like everybody else, so there was people were giving me no attention whatsoever. Only when I start to speak, they say like, "Oh, you sound like a gringo." I'm like, "Yeah," but then that's it. No, but yes, it's a different market over there, if we can say so, in Sweden, and recommend everybody to check it out.
Yeah, absolutely. Stockholm clubs, just do it, guys.
So after military conscript, like when I finished that, I had like a couple of months at home before going back to university, and my mother said, like, you're not gonna just stay at home, because I was like 19, 20 at the time. You're not just
Mm,
gonna stay home doing nothing for the whole summer. You need to get yourself a job. So I'm like, yeah, okay, so I just put an advert on. I saw an advertising, like, and I didn't know it was like a brokerage. I had really didn't know nothing about the financial industry at that time, and I didn't
right.
think they were gonna accept my application for that sales role, but they did. And there was a guy there, like the owner of the company. He used to work for Man Financial in
Okay.
London, and he set up his own brokerage in Sweden, in Gothenburg. So every morning we had like a market update. We were talking about what's happening in the market, what's
Uh-huh.
happening with non-farm payrolls, and this is in 2005, so 15 years ago.
Okay.
And from there, I started to sort of connect, news with price action.
Right.
And when I left that company 1 year later in 2006 to return to university, I changed and started to study economics. So I continued studying economics and business, and I completed my 3 years. And then I went to a Swedish investment bank for a summer internship, and I was like a fixed income and FX dealer.
Huh.
So we're dealing with Swedish bonds and
Right.
the Norwegian kroner,
Right.
Swedish kroner, and things like that. But then after that, I went to London, did my master's in economics, and I graduated in 2009.
Huh.
and it was the middle of the recession.
Right.
And when I was at the Swedish bank, I actually spoke with a guy from Citibank, and he's like, yeah, when you come to London, I'm going to give you a job, whatever. Because I was already then trading my own account, and I did some back testing with Pro Real Time, if you remember that software.
No, no. My
Pro Real.
life is my back test.
Okay, yeah. There's a Pro Real Time anyway. It's a charting
Uh-huh.
software. It's like Trading View almost.
Okay.
So I showed him this way many years ago, 2008, I think it was. But then in 2009, 2009, when I graduated, the world was on crisis. Like everybody was just getting fired. But I managed to get a job at FXCM, and I did sales for 3 months. Even though I studied economics, I wanted to be an analyst. But I managed to. My manager eventually told me, like, look, your sales are rubbish, and there's a role, like an analyst role, to do research in Swedish.
Right.
And that's how I entered. So I finally got what I wanted after 3 months, and then I became an analyst. And this was in 2000.
You had a very fortuitous road compared
Sorry?
to what very fortuitous journey.
Okay. What does that mean, fortuitous?
I would say it means fortunate.
Oh, fortunate. Oh, yeah, I guess so.
I mean, compared to what a lot of people have to do browsing the internet for trying to learn trading, etc. I mean, you had a nice route and doors opening for you. Anyway, my tagline is don't just count your pips, count your blessings. I've done 1,000 of these, and a lot of people have a much tougher time finding their way in shark and barracuda infested waters like our industry. You know what I mean?
I agree. The thing is, this always quite interesting. Like, there was one trader at Swedbank Markets, the investing bank I was working for, that desk.
Yeah.
And he was like super experienced. Like, they started like back in the old days, like I think they're like 50, 60 now. So they started very young. But the thing with him, though, is that he couldn't articulate exactly how he would trade. He would just go on gut feeling. So I didn't really pick up exactly when to buy and sell. It was more like, so that was the challenge. And then here at FXCM in London, I was the only analyst at the time because the Daily FX team and all the other analysts were in New York, primarily in Dallas.
Mm-hmm.
So I didn't have the opportunity to no one was there to teach me the ropes.
So who influenced you? Was it books, or would you just say you're mainly self-taught, Alex?
Self-taught. I mean, I read the classics like John Murphy's book many years ago.
Yeah.
And the thing is that what happened was that I caught up in this whole thing, short-term trading, scalping, day trading.
Yeah.
And it also had to do with the fact that I had a relatively small account when I started. And at the time, this is before you had micro lots, when you only had the mini lots.
Right.
So because I only wanted to risk like 1.5% of my account per trade, I was forced to have stop loss orders of maybe 35 pip at most. And what happened was that I was getting stopped at all the time. Then what happened, I think when they started to introduce the micro lot as well, I started to make more money. So I was putting that into my account. I was starting to become more profitable. And then just as a process of trading a lot, I realized that I made the most amount of money when we had some really nice trends on the daily chart.
Right.
So when we had like nice breakouts on the daily, like, when you see patterns that can give you some 300 pip or 400 pip, it was in those situations where my short-term strategy would make the most amount of money. But then I realized I don't actually have to trade really short-term. I can trade slightly longer term because it's less stress on me. I just hold the positions for a few days, up to a week or two. So it's less work. I just need to make sure the entry is right.
Do you walk away from your trading platform?
Yeah, I do. I mean, I work a lot with alerts.
Okay.
So I just put alerts on and then I get the notification. So I can explain a little bit how things have developed. So I read, you can see my chart, right?
Yeah.
So obviously, I always looking at the daily chart. So I always had a very good sense of trends in general, and I used to work with just simple breakouts to new daily highs and things like that.
Yeah.
But I started to study a bit like what Peter Brandt did, to sort of, and that helped me to formalize things a little bit more than I had in the past.
Okay.
And at its core, I just focus on 6 different patterns. I'll focus on the rectangle, actually 3 patterns: rectangle, head and shoulders, and bullish and bearish descending. Well, bullish ascending triangle and descending triangle, bullish
Okay.
and bearish rectangle, and bullish and bearish head and shoulders. So those 6 patterns I focus on. And I like to look at something like a 6-hour chart or a 4-hour chart. And I would look at patterns that are at least 4 weeks, uh, sometimes a little bit older, like a month or 2. And this
I
is a
feel a little deja vu here. Alex, were you at our trader summit, the last one we did?
no,
Okay.
this is
All
the
right.
first time featured
Someone
with you
else
guys.
that was a real classical technician like you. Can't remember who it was, but I just was getting a little deja vu here.
Oh
Okay,
yeah,
so I love this stuff. It's clean. You know, no indicators, and using a telescope instead of a microscope.
you could say so. Yeah. So obviously there's some stuff happening in the background, of course, like correlations a lot.
Yeah.
So that helps to make more sense of things.
Yeah.
And obviously I studied a bit of economics, but I noticed in the least year or two that I don't really pay attention to it at all anymore, even though like part of my work means that I have to read up on it. Like I do some CNBC interviews and stuff and all that, and I read up ahead of those interviews just to be able to answer some questions. And of course I have a long-term view on things, but mostly it's sort of technicals. And this would be probably the typical example where you have like a big consolidation phase, like a big rectangle to some extent, have a low here from June last year, another low here from September last year, and then you have the low from December. You have the high here from November 20th, from November, another high here in December. And then what we're looking at here is a classic rectangle, like sort of difference between this point and this point is 718 pips. And some of these big patterns just on their own, they're sometimes difficult to trade. But if you have like a smaller pattern like this one here, where you have a smaller rectangle, then that helps a lot. So the smaller rectangle pattern is this one, and that gives you that target. So when you have those
Right.
combinations,
Yeah.
I tend to generate really good returns.
Okay.
Now, I'm not as patient like everybody else. Well, not everybody else. I think I'm.
What do you
probably more
mean
patient.
of sitting to a target?
Yeah, I wouldn't actually push. So in the past, what I've done is I would try to keep the position for example, like this, like 718 pips. But many times I found myself, I have a very decent profit and then it goes back and I get stopped out at entry or for a small loss. And mentally, that's a bit draining, if you do that all the time. So what I'm doing now is I just go
Taking
like,
partials?
I actually, yeah, sometimes I do partials, but most of the time I just try to go out relatively quickly. So this one here, I bought this morning and I'm up with like 10 pips so far. And I'm hoping I can get out here. That would be like a risk reward ratio of 4.3 times. Actually, I'm working with tighter stop. Let me see. No, that's correct. So this is the low from yesterday evening. So around the New York close.
Yeah.
And I bought here on the breakout and
Okay.
this early morning. And obviously, if I would get all of this, it would be a 4.3 risk reward ratio. Am I going to keep it all the way up to that point? I'm not really sure. Maybe I'll just
When
keep
do
it
you
the same.
trail your stop to pull it up? Like if you had another 40 pips or so, maybe bring it up to BE. You ever use BE stops
No,
or
because
market stops only?
no, I don't use any like sort of break even stops, because what happens is many times because we enter like in the middle of the move,
Yeah.
The price is just going to come back and touch that level.
Right.
I could, of course, if I wanted to, I could probably put the stop loss below the low here
Okay.
from this session.
Right. But
I
you want to
wouldn't-
give it more tolerance.
Exactly. I don't really worry too
Let
much.
them breathe.
Exactly. Give me some wiggle room. So usually I would give it a few days to the upside. and then maybe get stuck here for a day or two, and then I start to reduce things. Now,
Okay.
this is quite interesting. So a lot of people focus on the initial residual ratio, the one you look at here, which is that you can get like a 4.5, 4.6 residual ratio. However, I noticed like this, if you're good at projecting the trend, what happens automatically is that you're gonna be able to reduce your stop loss. So most of the time I'll be able to reduce the stop loss with up to 40% of my initial risk. So if I'm risking 100 pip, I can usually
Yeah.
reduce it. So I'm just risking 60 pip.
Okay.
So what happens automatically, I can reduce the stop loss a bit. And then suddenly, if I would keep it towards target, I would get an 8.32. But as I mentioned before, I'm probably not going to keep it to target. Maybe I'm going to get out at 77. Or even if I get out at 76.50, somewhere here, I get that 4.87 times residual ratio.
Yeah.
So what's quite interesting is after the fact, what's the effective average loss versus the effective or the typical average win after you trade it, 30, 40, 50 times. And that is really what's interesting, is the after the fact initial residual ratio. That means that sometimes one can take positions where the risk reward ratio is not necessarily optimal, at least not initially, even though it's good to have a good risk reward ratio that is good from the very beginning.
Okay. So I noticed.
Yeah.
No, go ahead. Go ahead,
please.
Alex.
No, please.
No. Well, I noticed. I went to your Londinium.com website.
Yeah.
Yeah, and it looks like you manage a fund. Am I interpreting it correctly?
I do help. No, I don't manage a fund. No,
Okay.
No.
Okay. Is that a trading education site, or because I know you're featuring some type of account on there?
Yeah. So that's
Managed account.
I can load that. So it's not. It's just. What if I would have started with $10,000 when I started trading with my personal account?
Okay.
So in 2014.
Okay.
So what's kind of interesting is, well, this actually, I wasn't profitable until 2014. So in 2014, I started trading, and then I effectively collecting all my trading results because I use pretty much the same account.
Yeah.
That in combination with a crypto account that I have. And then this would be the results if I would have started with 10,000. I actually had more than 10,000 at the time, but I've been moving money in and out of the account because I bought a flat in London where I live in 2018. But this gives an indication sort of what one could have expect to some extent. So what I do here is that it's educational in a way that I share what I trade. And then it's obviously up to the readers if they want to use that information or not. And I explain to them, like, this is the pattern. This is why I'm trading it. This is why I put my stop loss here. This is why I'm risking like 1.5% of my account, or 1% or 2%. So that is what I do here. I also manage this website. I created this one, which is called investingcube.com, which I'm not the owner. I'm just I just set it up for them and manage it. And this is like a news website. And here I'm leveraging my experience from DailyFX. And I also used to manage another website. So we get like 250,000 people visiting this website every month.
Wow. How long ago did you start that?
So we got it included on Google News on September 2019. So yeah, we're doing really good here, numbers wise, and we want to beat. Obviously we're not going to beat FX Street anytime soon, but I do think we could hopefully beat them. I mean, I know the guys over there, so I met them many times. So yeah, we want to beat them. We want to beat everybody on the news on the news side of things, right? It's news. This is not like trade ideas. This is just news, So I do this as well, and I also represent the broker ATF.
You know what? I'm already dialing Francesc right now. He has been listening to this whole conversation.
He's not going to take it seriously though, because I think I'm at 250,000, and Francesc, I think he's like at I I think he had 21.5 million users last month. No, last
Wow.
year,
Yeah.
according to a post he did on
Yeah.
LinkedIn. Maybe he'll buy me
Yeah.
one day. He'll buy the company one day.
There you go. You have a lot of plans.
Yeah.
Alex is a man with many plans, a renaissance man. So you trade and you develop websites, and your demeanor is calming.
Yeah.
Just having a conversation with
Yeah.
you, Alex. So is that the best? Do you want to talk about anything else in the markets? Because, we are
Yeah.
pretty close to wrapping, and,
Yeah.
I've done many of these, and I can tell who's a pro
Cool.
when I talk to
Thanks.
them. And
Yeah.
we've joked around a little bit, but I already respect you,
Thank you.
and you're now my trading warrior brother. Like it or not, you can't get out of it. It's like being in the mafia.
Awesome.
All
Thank
right.
you so much.
So
If you have-
Alex, I hope you have a great year.
yeah.
And perhaps in the spring we could do this again and see what kind of things you're looking at now. Good hunting on the pound CAD trade, buddy.
Thank you. Thank you. Yeah, when you ever come to London or so, just send me a message. We'll grab something to
Okay.
eat or a drink.
All right, everyone. Thank Alejandro. Okay, and you could find him at Alex100. Is there an
Uh,
underscore in that?
no, so
No,
it's
Alex FX00.
Alex. Exactly, Alex
Yeah,
FX 00.
zero. Yeah,
So that's
and
my
you could
Twitter.
go to his website. It's LONDINIUMFX.com, LondiniumFX.com. Thank
Exactly.
you, my trading warrior brother.
Cheers. Thank you
Good
so much for
luck.
having me. Talk soon.
Yeah, good luck with the Fed today.
Thank you. Yeah.
Okay,
Cheers.
that's a wrap,
I'm,
everyone.
I'm hoping it's not going to impact, but obviously it will impact a bit.
They,
But
the
yeah,
plunge protection team has to hold the S&Ps over 3,800, don't you think? We'll see if they could, step in while Powell is begging the U.S. Congress to pass 1.9 trillion rescue bill.
yeah.
So interesting, to watch the theater, isn't it?
Yeah, it's always interesting that, but I know what you mean. It's always interesting. I don't pay too much attention to it anymore, though. I used to pay a lot of attention to it, but not anymore. And I don't like to trade those events either because I
Yeah,
always get stopped out. But obviously, there
yeah,
are people
I
that
don't like
thrive on
trading
those.
red events, and I'm just looking for this one thing that I wrote that really comes from Livermore.
Yeah.
Anyway, I can't find it, so he's saying really that the name of the stocks change and everything else changes, but Wall Street will never change because human nature never changes.
I agree with that 100%. Like
Yeah.
there are some really good books. There's another one of the classics. Let's see if I can find it.
Operation,
What was it?
stock market operator. Here it is. All right. The pockets change, the suckers change, the stocks change, but Wall Street never changes because human nature never changes.
Beautiful.
Yeah. All right,
Mhm.
partner.
Cool.
Have
All
a
right,
good
guys.
week, Alex. Really great meeting you. I'm glad our paths crossed. I'll thank Twitter for
Cool.
that.
Cool.
All right,
Yeah,
buddy.
definitely. Cool. Thank you. Have a good day, guys.
All right,
Cheers.
everyone. That's a wrap. Good luck with the Fed later. You could, go to member chat if you're part of our community. Otherwise, we'll see you all tomorrow. Remember, don't just count your pips, count your blessings. And if you could find one thing to be grateful for, it's hard to be depressed. I've tried it. You can't be grateful and depressed simultaneously. See you, Monica, Laura. Adios.